everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. mid-session brief. We're on a few seconds early because I want to execute this trade right here. We've got a 5-8-13 crossover on the 30-minute Euro USD chart. We're going to go ahead and send them long on this close. It looks like we're going to get that crossover. Remember, in order to make this trade, the 5 has to cross over the 8, and price has to close above all three, the 5, the 8, and the 13. So we're going to go ahead and we're going to rock this trade in about 15 seconds, 14. I'm going to send them long at market, and I'm going to show you where I'm going to put my stop loss and really try to build a real tight scalping trade that hopefully we have a resolution on by the end of this live stream. So I want to welcome everybody back. We're moving fast today. There's a lot going on. Okay, here we go. We're going to go ahead and buy it. And there is our long. So we're officially long this Euro USD. 30-minute chart, 5-8-13 crossover. Where would I put my stop loss? I've got two options. Right now. Where would I put it? If I'm serious about taking a position for the day, I can put it right down there beneath that swing low. That really is the bottom of this bearish market structure today. But if I'm aggressive and I'm going to execute a scalp, I'm going right there. There's my my inverted hammer, my hanging man, and then price breaks out, and we're sort of back above those moving averages. My spike low right there is going to be at a 108.54. Let's go ahead and put this thing at right around, I don't know, let's go 48 with it. So if I'm going to go 48 with my stop loss, somewhere down in there, we just bought 73s, my kind of trade. Looking for 25 pips, what would that put us at? Puts our profit target at a 1-to-1 ratio at 108.98, right in here somewhere, and that's going to give you a pretty good chance to succeed. If you want to take a position and let this thing roll, you can certainly build your trade based on market structure as well. Your profit target could be maybe up there at 109.25. That would be a 1-to-2 risk versus reward. Now, as far as entry, I just entered because I wanted to get this trade on the books and I wanted it down. Just so we could have something to go over here on this live stream. But is that the best possible entry? No. If you want to be patient with these moving averages, more times than not, you're going to get a pullback on a buy or a sell. Why? Because markets don't move in straight lines. So if you do decide to wait, you can see you've got convergence, 50%, 62%, that happy zone right in there, right around 108.66, something like that. If you wanted to wait around and potentially get that trade, you'll have an opportunity more than likely to get it. The only problem with trading like that is if, in fact, this market blows up and goes to the moon. I don't see why it would. There's no real market drivers out, just the news cycle. But if, in fact, this thing blows, then you're going to miss it. So you've got – remember, trading is sort of a metaphor for, hey, listen, we've got to give a little to get a little. I've got to give away this security to get – or excuse me, I got to give away the breakouts to get better trade location. I got to give away security to try to make a profit. That's what trading's all about. It comes from the word trade-off. All right. I mean, it's a trade-off. Everything we do is a trade-off. Do we buy? Do we sell? What's my risk? What's my reward? What kind of system am I using? That's what it's all about. So good to see everybody back in the room. I want to welcome you, get us off and running with a little bit of a trade execution going against us right now. We'll see what happens by the end of the stream. We've been on a bit of a run lately. Let's see. Thame, good to see you. Team Arena, what a day. Absolutely right. Bobby Bob, always a pleasure. Mark Corp, 3 for 3 today. Absolutely good stuff, Mark Corp. You can remember this trade from yesterday, this trade idea going very well with the U.S. dollar Swiss franc. You can see this is just a gem, oversold territory, 4-hour chart. We got the buy signal right there. We turned around. The market started crossing over, but broke our way. That's one of the reasons why I don't manage these trades according to crossovers. I'm looking at it, setting my stop loss in an important area. If you wanted to tighten it right now, you probably could tighten it right beneath that spike low there, this double bottom, this 4-hour double bottom. But I think that if you're going to do that, you might as well just take the money right now and go home. So pretty good trade. Remember this, we bought it on a pullback yesterday, and you can see the latest sort of in our little coding expedition. There was your latest buy signal as that 9 crossed over the 20. Where would your profit target be? Depends on how much leverage you're using and what you want to get done. But right now I'm shooting for somewhere up around 89.25, which is quite a ways away. So we'll just wait and see if we do get that big break. No real market drivers the rest of the week, only the news cycle. Nonstop madness. That's right, Team Marine. It's been absolutely amazing. We had a trade idea out today. And remember, if you want to trade any of these trade ideas, step by switchmarkets.com. They'll get you up and running. There's going to be some big news coming out on Switch relatively soon. I'm not going to spoil it here, but it's going to be big news. And remember, there's trading contests. There's bonuses. There's all sorts of stuff. So if you're interested in getting involved with a broker and try to make the most out of your money, out of your purchasing power, then go ahead and give Switch a call. All right, here we go. Key level 3,000. This is our trade idea for today. Ralph H. Good to see you, Ralph. Glow up. Glow up 369, always a pleasure. Glow, we like to see new names in the room. I don't believe I've seen yours before, but fantastic. Hope you enjoy the stream. If you have any questions, be sure to ask. I'll do my best to get to you. Key levels 3,000. This is easy. This is easy technical analysis, guys. I'm a big believer in easy. Remember, these streams, there's only a couple of rules. Number one, if it makes money, it's the right answer. That's it. Number two, easy is always better. Always better. And number three, ask questions. It's cheaper than losing money. We learn from our losses. I've been around. I've taken enough losing trades. Ask me the question. I'll see if we can help you out a little bit if you're struggling in the markets. In any case, the trade idea from today in the How to Trade Trading Room on the analytics thread, it's a sell. It's a sell. And you go, Shane, you're getting killed on this. No, I'm not. We're not in yet. The idea here is very simple. You're going to see some compression right around 3,000. We're going to look to get in on that bump, that retracement right beneath 3,000. So I'm looking to sell 29.94.50s. That's about as aggressive as I want to get there, and I'm going to look for a quick $10 payoff. It can happen relatively quickly. I want it today, though. I mean, there's something to be said about market timing and being able to get involved at the right time, right place, right time. It is impossible to be in the right place at the right time. It really is. Some folks are. That's funny. I live in a town of 5,000 people here up in Montana. And I'm telling you, earlier this year, there's a thing called the Montana Millionaire where they sell a set amount of tickets, and you can either win $1 million or $2 million. And I'm not kidding you, town of 5,000, there's a little bar about 3 blocks away, sold $1 million ticket. They sold it at 6:30 in the morning, 30 minutes after they went on sale for the year. Why would I go into that story? Because if I would have known they were going to sell the ticket, I would have went down there and bought one. You can't be in the right place at the right time. All we can do is give ourselves an opportunity to do that. And the way that I do it is I use basic technical analysis, I use macro fundamental analysis, and I try to figure out exactly when the market's going to move, and if the market gets to my level, this is likely to happen. I believe it's what is a Boolean logic. If this happens, then this is likely to happen. If-then statements. That's basically how I run my trading, and it's simple. I get criticized all the time online. People go, well, that's, you're making videos on showing people how to set up indicators. I go, yeah. You got to know how to trade. You got to know what you want to do before you get in the market and do it. So I always laugh at those folks. I think it's actually kind of hilarious that there's so many folks that are sort of, it's got to be hyper technical and hyper complex, and I got to have level 2 data and order flow and the fastest internet and the biggest computers. No, you don't. You need to be smart. You need to be smart and understand what you have and what you want to get. That's it. That's it. Understand. Listen, I watched a YouTube video the other night, and I'm not going to mention the influencer, whatever the hell that is. This influencer said, hey, I turned $5,000 into $300,000 in 100 days. And I go, God bless you. Why are you still making videos? I mean, to me, it's so stupid. Figure out what you want to get. All right? If you want to make $300,000, you're probably going to need more than $5,000. You will. Now, eventually you can get there. But we have so many opportunities in the markets now with prop. You can go get a prop account. It's going to give you $50,000 in purchasing power. Probably better to go after your $300,000 using their money than yours. It's just a thought. I'm not selling a prop idea either. But that's what I'm talking about when I bring up a trade that's this easy. A lot of folks are going to say, I don't understand it. Well, key level's 3,000. What do you think happens at 3,000? It's a topside target for many, 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 many traders. A lot of them are institutional. I've been harping on and on about 3,000 since last fall, since before the election. It looks like we're going to get there. 29.78 is our print. What is the idea behind this trade? It's relatively straightforward. I want to sell. I know there's going to be a little bit of two-way action at this level. Buyers and sellers. There's going to be profit taking right in front of 3,000. There's going to be fresh shorts in front of 3,000 with their back against 3,000 trying to pick the top of the market. Do I believe 3,000 is the top? I have no idea, and I genuinely don't care if it is or not. If I owned a bunch of gold, I don't own any gold. But if I owned a bunch of gold bars in the other room, then I would want it to go to 5 or 6 or 10. Bottom line is this. I know there's going to be a lot of people that have an opinion about gold at 3,000. And all I'm looking for is I'm looking for a way to play to the short side, and I want to get in on a little bit of that action. Remember, prices don't move in straight lines. They go up, they pull back, they go higher. I want to make the money on that pullback. So how can I do it? Relatively easily. Piece of cake. Go to 3,000. Let's go ahead and just build a short position. Where do I want to be short from? I want to be short in front of that. I want to be short in front of 3,000. Essentially, that's the trade. risk versus reward ratio of about 1. I would let this, I'm going to be eyeballing it relatively closely, but if we do get a swift run to 3,000 through our entry, and we might get it right now, if we hit it today, it's going to be a real easy trade. It's going to be tough, though. I don't think we're going to get it today. Maybe, though. Maybe. There's a lot going on. If we get a little bit of a push higher, we could get it. That's a 30-minute chart. We could get it towards the end of the day. And I think that if we get it today, it's a slam dunk winner. Now, if this market loads up, what I call loads up, for like 5 or 6 days right in front of 3,000, and we don't get elected, then we got to be real careful, because in that case, what would you have? You'd have that pennant. You'd have that bullish pennant. Price is loading up in front of 3,000. It really wouldn't shock me to see us run to 3.25, 3,025 before we reverse. So that's sort of my attempt at showing you guys how that trade would work on sort of a telestrator. But that's the trade. It's 94. So let's build it one more time, and I'll just leave it up. Something like that. Check out our trade ideas for exact specs on that. Dragon 131. Good to see you, Dragon. Good morning. Using fibs on a demo. 4-hour FX markets and doing well. Thanks, Shane. No worries, Dragon. If you're using Fibonacci's on a 4-hour Forex chart, your biggest challenge is going to be staying patient. Because if you can't stay patient, you take trades you shouldn't take. And if you take trades you shouldn't take, you lose. But I'll tell you what, the 4-hour chart for me, even this 4-hour gold chart, I mean, if I was attacking this, I outlined a trade that's going to probably be evergreen for the next couple of days. But if I'm attacking right now, you go, hey, listen, Shane, I got to make car payments. What should I do right now? I got to pay the rent. I'd say you'd be a fool not to try to buy gold. Well, you just told us to sell. I told you what's probably going to happen up around 3,000. If you're trading right now, right this second, pull back buys all day long. 4-hour chart, beautiful spike low, nice upper extreme. It's not a fully developed spike yet because this bar is still in play, but once the next bar opens in 48 minutes, it will be a spike unless it pushes a little bit higher. But this right here, you're buying pullbacks. 38%, 29.65-ish. So on a 4-hour chart, buying 29.66s, it's probably pretty good business. I would do it right now. I have no problem doing it right now. If you wanted to go to a 30-minute chart, something like this, if you're going to do this intraday, you got to be very careful, number one, because if you have to be able to read price action. You don't marry these things. We're looking just to get in and hit that and get a few bucks and leave. So if I'm trading this right now to the bull, 30-minute price structure is pretty darn close to what we've seen on the 4-hour. That's my happy zone. That's where we're more than likely going to stall out this sell-off right here. All you're doing right now is wiping out intraday shorts. That's it. Or excuse me, intraday longs. What just happened? You have an inverted hammer right here. You just traded beneath that low, and what do you think occurred? Everybody that was playing symmetry today and getting in on a trend just got knocked out. Now price is probably going to rally from here. If it doesn't, towards the end of the day, I love an opportunity to bid something like gold when it's up 1.5%, all-time highs, a lot of bullish sentiment. I'm watching gold. That's the story of the day today, no question about it. So that's 2 trades for gold. If you're interested, for me personally, I'm going to be watching it closely. I really want that 3,000 trade. I got a lot of confidence in it, but we will keep this. It's dynamic, and we'll keep the situation going. And if I see something that scares me off it, I'll let you know. As far as this, stocks tumble Thursday, pushing the S&P into a 10% correction. I knew a guy that called for at least a 10% correction at the beginning of the year. I believe that it's going to be more like 25 or 30 by the time we're done. But you can see what's happening. Markets are coming off every single day because they are heavy. Fresh uncertainty. This gal here looks like she's losing a ton of money, but that's okay. We're not investors. We're traders. She's losing money as being an investor. We're trading, and we're making money on the way down. That's the name of the game. And it's all about Trump. It's all about tariffs. It's all about trade wars. Right now, Treasury Scott Bessent, I wrote that in the trade idea earlier today, they're not concerned about a little market volatility. Basically, it's like giving the economy a dose of medicine. The only thing is we're not going to know if the medicine's working for quite a while, at least 3 or 4 months. Putin says Russia backs Ukraine ceasefire. That's another huge deal. Tariffs. This is another one. Government shutdown. The Democrats are threatening to shut down the government tomorrow. Now listen, on a normal political calendar, I would sit here and I would say governments never shut themselves down. I've watched the U.S. government. They always make a deal. They always figure out a way to kick the ball down the road and keep spending. Maybe not this time. The Democrats have the ability to shut the government down, and there is growing angst. I mean, the vitriol coming out of the left in this country, top to bottom, against Trump is nothing like I've ever seen. We're seeing journalists. We saw a journalist get killed on Sunday night, which was they don't really know what happened, but a lot of people suspect it was actions from certain groups. There's been death threats on another big-time radio personality that was really surprising. We've seen a lot of Tesla things happening to Tesla owners, Tesla dealerships. There's a lot going on, and it will not shock me at all if the Democrats shut this thing down tomorrow. If they do, they do. But right now, the markets are pricing in all of these different things that we're talking about, all of it, and they're ignoring probably one of the better numbers we've seen in a while. Let's see. Team Arena, Shane, what was up with the Trump coin and Tesla dumps? Any theory behind if they're tied together? Well, you figure anytime something goes down, we'll look at Tesla here in just a second. I think Tesla, you're seeing, it's no secret that institutional money has lined up against these interests in the past. There's no secret. That was basically the crux of the Wall Street bets. I don't know if you guys remember Wall Street bets and the Reddit traders and everybody that they got in there and they got after GameStop and they tried to short squeeze. They tried to squeeze all the hedge funds out that were naked shorting everything. I'm not going to go into conspiracies here today. I won't. Maybe I should just talk conspiracy. A lot of folks like that. There was a tremendous amount of put options put on our stock market, and it happened about 2 weeks ago at the beginning of March. There's a couple of people that believe certain things. You guys that have any that are well read or understand, remember the story of Julius Caesar. Beware the Ides of March. The Ides of March, the 15th of March, is a big day really in classical history. Classical, like I can't remember what you'd call it. Just classical history. Caesar was killed in March by folks in his own Senate. Now, we don't expect anything that dramatic here against leadership, but we saw a tremendous amount of put options put on this market, and that gives the institutions the ability to sell at a certain price. Those put options are anticipating a major move, a major crash. What makes options trading so hard is timing the market. So what I'm saying is COVID blew up in March of 2020. Crises typically happen in March, at least in recent memory. There's a long history of March being a pivotal month in the year for crises, also October. I think we're on the cusp of a crisis right now. This is crisis trading. There's no question about it. I'll show you the receipts here in just a second. We got to go over these PPI numbers, though. Yeah, Team Marina, you remember. In any case, there's a lot going on here, and it's not all market-oriented. I mean, it's politics, it's trade wars, it's war in general, and it's civil unrest. It's anticipated unrest here in the United States is bringing a tremendous amount of angst to the equation. Today should have been a big day for the markets. I mean, everybody basically was doing jumping jacks yesterday over the CPI. Look at this core PPI number. I like the producer price index. It shows us pricing stability from a wholesale standpoint. So when we look at something like this, I go, holy cow, it retraced. We don't see inflation retrace ever. We haven't seen a negative inflation print in quite a while. So when I look at this, I'd say, okay, well, that's a big deal. Typically, we would start immediately saying, well, maybe we will get our rate cuts sooner rather than later. And theoretically, that should send your risk assets higher. That's not what happened today. Also, initial jobless claims, 220,000 beneath 226,000 and 222 previous. That's a better number than you've seen in quite a while, even with all the government layoffs. That's interesting. PPI, 0%, beneath 0.3 expected and down from 0.6. These are positive numbers, flat and negative. I figured we would see hot numbers all week long. Something's going on here. Is this the inflection point for disinflation? I don't believe it. No question about it. I got to see more evidence. And Jay Powell's going to tell you the same thing at his next Fed meeting. He's going to say, well, inflation's still well above our 2% target. Yeah, but we got to see more evidence. All right, great. Well, let's see it. Here's a little bit of evidence. Look at your bills market. Look at your T-bill market. Remember, as yields go down, that means that they expect more money to be in the system at some point in the near future. 4-week, that's 1 month, 2 month. And 30-year bonds are still paying you 4.6, but that's a big-time plunge. 30-year bonds are down. That's a big – we're starting to talk about mortgage rates potentially falling dramatically. What does all this mean? It means that your U.S. dollar should be weakening a little bit. You should see the U.S. dollar sort of weaken. Well, what's happening with it? Well, look, we're already going to get knocked out of our Euro USD trade. That one reversed on us. We're not out yet. We could put we'll leave this stop loss right here for a real stiff scalp. But what's the DXY doing? It's actually up. Things are messy right now. Things are messy. So tariffs, wars. Right now, they have an agreement in principle. They're sort of dotting the I's and crossing the T's on a potential ceasefire. That's fantastic. The markets don't like it. Take a look at this. US 100. We talked about the validity of these Fibonacci retracement levels, and when they do give way, look out. And I mean look out below. We're testing that 62% level at 19,151. This is ugly stuff, guys. I mean, this is no joke. Right there, you've got a doji. Right there, bounced off of 61%. Nice rally. We were looking to get a little bit of momentum, maybe chip in, maybe rally back to 20,000. Remember yesterday I got that question, Shane, do you think the US 100 is going to rally to 20,000? I said no. I think you're in a hell of a downtrend. And right now, you want to sell it. As soon as you break beneath that zone, I mean, it's last stand time. That level took a hard strike and a lot of action back on the 11th of March, and then you got a nice rebound, and you're hitting that level again. When those macro levels give way, we don't just go down a little bit. We go down a lot of bit. And if you want to take a look at your 30-minute market structure, there you have it. There's your doji. If we sustain trade, if we close beneath that level today, Katie bar the door, we're going a lot lower. My next level, my next support zone, I wouldn't even consider buying this market until 18.5-ish, right down in here, right above our 78% retracement. And then life gets real tough because if you don't hold 78 on this monthly right here, if you don't hold 78, 18 3.0 return, you're going lower, and you're going a lot lower. This liquidity sweep right here that we saw back in August, that thing's history. And we'll start grinding. And if, in fact, that does happen, you're in position to have a negative year, to close negative for the year. And we're only in month 3. This is action. This is the correction we were talking about. December, January. This is it. Let me see. T. Marina. China's $100 billion short against the dollar. China's in a tough position because they hold so many T-bonds. T-bills, T-bonds, U.S. Treasuries. In a lot of ways, they're sort of locked at the hip with the Fed. What happens if Congress decharters the Federal Reserve? Then what? What does China do with all their treasuries? Tear them up? Build a fire with them? Nobody knows how any of this is going to unfold. It's all theoretical. You talk to any economics professor you want. It's theory. This is theory. Nobody knows what these tariffs are going to do. I have some ideas on what I think. I haven't gone public with any of them because I don't really know yet. But we knew that we were in for an adjustment period, and that's exactly what we're seeing. We got to look at Tesla though, because it's a huge story, and it really is. I mean, what's happening to Tesla? I sort of put something out earlier this week about buying Tesla, and I'm not a real big order block trader. I'm not a smart money trader. I'm really not. But look at this order block down here where we traded between February of 2024 all the way through June of 2024. So what is that, about 4 or 5 months? That's a tremendous order block. I'm not looking to buy Tesla from 236. It looks to me like the hedge funds are lining up against Tesla. I imagine there's probably a lot of naked shorting going on, but we have to be realistic with what exactly we're buying when we buy Tesla. You're buying a company that's strong. Unfortunately, the demand for electric vehicles probably is going to take a back seat for the next 4 years. And you put the political heat that Musk is sort of drawn from his role as the head not instigator, but the head leader of DOGE, the DOGE Committee, Department of Government Efficiency. It's brought just a political firestorm his way. It's all hurting the stock. Am I buying Tesla? Not yet. I think it could come off another $50. If it gets bad enough, if the shorting gets bad enough, if the political heat gets bad enough, then I'm sitting down there at 180. And he goes, Shane, God, you give us these levels and they're way off the lead. And I go, listen, that's what makes trading. When the market finally comes to you, at least when it comes my way, my eyes get as big as saucers and I go, we got you. It's like a kill shot. You got him. That's what I'm waiting for. Are we going to get it? Maybe, maybe not. Maybe, maybe not. We just got to wait and see. Let's see, most of them. If you are not an SME trader, so what are you? Maybe you have a better style. Yeah, I'm not an SME trader. I trade Fibonacci's and fractals. So if you wanted to sort of get a basic primer on what I do, come by How to Trade. Go into our trading academy, click on the professional or the elite trading series, and go to the Fibonacci retracement videos. There's about 5 of them, or excuse me, the Fibonacci counterpunch videos. I trade Fibonacci's that are based on, well, it's redundant to say they're based on the Fibonacci sequence, but the idea is real simple. You find waves, you find spike lows and spike highs, you look for action, you look for good moves, and then you go down to shorter time frames to see if you can get the levels to line up. It's called converging indicators. So like right here, let's say we were trading a Tesla CFD. I've already got my macros done. My macros are in. Okay, my monthly levels, we've broken beneath 78%. I believe it's a matter of time before we get to 181. I'd probably be a heavy bidder at 185 now. Until then, let's say we're trading a Tesla CFD. Am I buying right now? No way. Am I selling? I'm considering it. Why? Because I'm looking for levels that line up. Now we had a support zone that sort of checked price up here momentarily. Now what I would love is to find a time zone of a lower time frame that lines up exactly with it. There's no doubt about it that this level right now is resistance. There's no question. Look, we gapped up, positive, gap up. Then bang, we're back heading south. So to answer your question, Masa, what I would be looking to do is taking Fibonacci's until they line up. Now, this right here, I've seen setups like this more times than I can count. The key is having 15 years of experience picking Fibonacci retracement ranges. Spike high, spike low, retracement. What's so special about that area? Macro 78%, line in the sand. Okay, it was sort of a support zone. It was. We had a nice bounce right there. We came right to that low, to that high, and then we broke it. And once we broke, we came back up, tried to make a stand above that support level, took it out. In my view, that was a heavy sell. You had to sell right there because you had a 246.58, monthly 78%, and then you come down to the daily. The daily was a 38%, plus you had 250. A big round number, a key level of 250? Sell it. No questions asked. Now, do I do that in the shares market? No, I don't. And the reason why is I don't have access to share CFDs. I'm in the United States. We don't have CFD market access. In order to really get in there and short this market, what would you have to do? You'd have to have a big account, and you'd have to have special concessions from your broker that would let you place naked shorts. And when you place a short, essentially you're borrowing the shares and selling them to somebody else and making money on the difference. That right there is a beautiful trade. Could I have got it? No, I don't really have shorting market access or CFDs. So I would be using an approach like this. An approach like this would be best. I use it on commodities, futures, currency futures and commodities, but it works great on Forex. Matter of fact, it works best on Forex from what I've seen, just because the markets are so good. The only problem is you're waiting around forever to get these levels to come into play, and they pay us to wait. They don't pay us to trade. But something like that, that's beautiful. I mean, that's exactly what we're looking for. All right, guys, I do want to talk a little bit about natty gas. We did have an inventory number out today. It wasn't really, it didn't really blow me away. But what I do want to show you is a sort of an old market profile trick that I learned back in the old days when I was starting. I had to learn all about Stoudemire's approach to market profile. Stoudemire was sort of a mad scientist genius out of the commodities exchange back in the CME in the old days, the Chicago Futures Exchange, Commodities Exchange, and he came up with his own pricing theory. And for me, it's the go-to. It really is the basis for everything that I believe in trading. And what it is it basically price runs and rotates. Price sends out a probe to a different level, and then it trades that level for a while, and then it sends out a probe to another level, and then trades that level. Well, in Stoudemire's his thesis, which I've got it in there, the damn thing's 400 pages long, he talks about gaps. That's one of my biggest rules when I'm trading commodities. Gaps get filled, gaps get filled, gaps get filled. This gap right here in natural gas, and I was on the air. I was just getting started with these live streams, and I was in December of 2022, and then right there in January 2023, created a gap. Now that gap right there stood for a long time, 2 years. But we talked about it. That line's been there forever. 443, something like that, right in there. That brought us a gap. And what happened? We closed the gap, guys. We closed the gap. Take a look at this. Russia-Ukraine angst. That was the initial invasion. This right here, Russia went to, said, listen, if you're going to buy gas from us, you're buying it in rubles. W formation, just didn't get outside the lower Bollinger Band. And then right here, you've been on an absolute tear with natural gas over the past 6 months. Do we expect this market to come up or come down? I have no idea. It really depends on U.S. fossil fuel production. It depends on tariffs. It depends on Russia-Ukraine peace deals. In my view, these last 2 months, there's been a lot of saber rattling from Russia-Ukraine and this priced escalation. Is it over? Is the war over? Not yet. We're getting there. Right there. That's why I trade fractals and I trade Fibonacci retracements. 4740, 38%. What's this month's high? This month's high is 4839. That's a pretty darn good resistance zone, and you've seen it. Gap got filled, resistance, natural gas turnaround checked up. All right, one more market, and then I'm going to go ahead and sign off for today. And then we got to go over a few things about the way that we're going to move forward here at How to Trade. There's going to be some big changes, and they're going to start next week. All right, right here, monthly chart, U.S. oil. I put this out as a trade idea. Don't forget 64.58. Don't forget it. Right now we're trading 66.50. That's going to be an interesting zone. Let's go to our 30-minute chart. All right, we're right around this key area, right around, I wouldn't call it a kill zone by any stretch, but we're right there. What do we got today? Let me blow this chart up so we can see it. Okay, that was about 2 hours ago. What happened? Lots of Russia-Ukraine talk. Lots of statements from Putin. They're coming out all the time. 8 a.m., 7:30. 7. I start trading right there about 9 a.m. Eastern, 7 a.m. my time, and I do that because the volumes pick up consistently each and every day. How would I be looking to trade this type of arrangement today? How? It's really hard. It's really hard because the market's so choppy. Let's go to a daily chart and see if there's anything we can hang our hat on. This is really difficult. I love this level. This should be the level we're doing business at. We should be bidding down there. Put a trade idea out a while back. If you forgot it, check it out. I don't particularly care for this. I don't like doing this on just a 2-day range. I don't. It's not a good enough wave. It just isn't attractive enough for me. 66.31. If you wanted to scalp, maybe buying 32s. It's only about 15 pips away. I'm probably only looking for 10 or 15 pips on that. That's a quick one. That's a real quick trade. Now, the problem you run into here is that with U.S. oil, look at your spread. Your spread's 5 cents. That makes scalping this really tough. That's why I prefer a futures contract. But if, in fact, you are going to trade this, you probably buy 66.32s, and you need to be shooting for at least 15 to 20 pips because you've got to make up for the 5 pips, the 5-pip spread, which is, man, that's tough. That's tough to overcome. But right now, the big level's right down there for U.S. oil, 64.58, 64.59. Let me see. You have been waiting for that gap for 2 years, Mosa. No, there's really no way to execute the trade, and it really, pardon my language, but it pissed me off because I was sitting around going, okay, where can I execute this trade? How can I get this trade? And the answer is, look at all these days that went by. If you're going to trade like a natural gas CFD, you're going to get charged a rollover fee every Forex close. That won't work for you. That won't work for you. Now, some traders, like right here, I thought we were going to fill the gap back in November of 2023. I'm surprised we're filling it now, but we did. We filled it. Is that a practical trade idea? No, but that's something that people on CNBC, like if I was on CNBC sitting there across from Jim Cramer and he's going on and on about some bow wow stock that nobody's heard of, going, buy it, buy it, buy it. I would turn around and say, did you get in on natural gas, Jim? And then he'd look at me with a dumb look, and I'd pull this chart, and I'd say, gaps get filled, gaps get filled, gaps get filled. That gap is filled. Where do we go from here? I can build a strong case for the short side of this market, a strong one. Do you sell from 4129? Probably not. That 38%, that's a banger up there. It already went. Right now, that would be my key level. If I was looking to short with any real money, I'd be up there at 475-ish, somewhere in there. Take the short. If, in fact, you wanted to short right now, there's a lot of reasons to short. If you get a Russia-Ukraine into the war, that could definitely send us lower. Summer in the United States could definitely send us lower. Increased U.S. production could definitely send us lower. Tariffs, though. Tariffs are the issue right now. We don't know what's coming next tariff-wise. We just don't know. So, yeah, to answer your question, Mossad and T Marina, could you sit there for 2 years and trade that? No. You know, honestly, how like a guy like Soros or maybe some Warren Buffett's, how Warren Buffett would play this chart? He would have went and bought a bunch of natural gas companies. They would have invested in natural gas companies saying, okay, is the bottom in? Because what do you think happens to a natural gas company or a driller when price is down here at 150? They're in the tank. I mean, there's some ways where you'd say, Berkshire Hathaway would show up and start buying natural gas drill rigs over in the Bakken to play that rally. That's a threefold increase, and it wasn't that long ago. So that's 300% going back a year, 300% in a year. Somebody got the money. It wasn't me, and it probably wasn't you. Let me see. T Marina, how's that difference in an imbalance? Yeah, the biggest thing is you're right about the imbalance. It's just different. It's just different verbiage. The problem with imbalances is people look at those great big long candles and they say, oh, it's an imbalance. There was no sellers there. There was no buyers there, and that's why price moved. And I would say, yeah, that's true. I'm talking about when price actually skips a level. So I'm talking about, the basic imbalance thing while we're on it, and then I'm going to go ahead and sign off. I've droned on too long today. But I won't be able to find you an according to Hoyle example, but I'll show you one of the first tricks that I was taught when it came to futures trading. All right, bear with me here. This isn't going to be the prettiest drawing in the world. One of our basic concepts is real simple with market profile. One of the first things I was taught was a B formation, capital B. Boom. There's the top of the B. Down there would be the bottom of the B, sort of a capital B. This right here would be what the smart money guys call an imbalance, that move right there. Well, we sort of just knew off the top of our heads. We'd say, okay, what does all that mean? If we've got a value area up here, did a lot of business here, we did a lot of business here, not much business here, what could I play on price? Well, if I'm down in here, I know that I can put my stop loss under there and shoot for that gap in the B. That means I don't have to be right to make money. And that's really what trading's all about. It's figuring out how you can be wrong and still earn. And you'll see right here, did you get stopped out? Nope. Your stop loss is beneath the bottom of the B, and you cut into that sort of gap or that imbalance. That's not a very good example. It's not a pretty one. Typically, the Bs would look something like this. They really would be. There would be a run, and then there would be that, and then there would be price here. So this value area here, this value area, and you would either be selling against the top, and right in the middle would be your target. That would be how to trade a capital B on market profile. Something like this. I guess I could turn the chart on. Yeah, I blew that one. Sorry about that. All right, B formation real quick. Run, bang. You did some business there. You did some business there. There was sort of your imbalance, what you guys would call an imbalance. Well, what I was taught was to just do this. Sort of, this isn't a good example, but it would be something like this. There would be sort of the top side. There would be the bottom side. Your profit target's going to be in the middle. So you're going to sell from up in here with a stop loss up there. You're going to buy from down in here with a stop loss down there, with the idea being the price is going to move back towards the center of the capital B. Very simple. That was one of the first tricks I was taught, 30-minute chart WTI crude during the U.S. session. That's how you do it. Sorry about that, guys. My chart clicked off. All right, everybody, I'm going to go ahead and sign off for today. Be careful. Government shutdowns big. Gold trades coming into view, 29.81. Let's see. I think we had a reversal. I don't know what happened to our Euro USD trade. Dollar Swissy coming down a little bit, so it looks like the dollar's giving back some puff. Let's go right here. Euro USD. Yeah, Euro USD not doing real great about its scratch. So we're going to see how those crossover trades pan out. Tomorrow, I'll be back for a Friday strategy session. We're going to talk crossovers. We're going to talk some RSI. Next week, we'll talk more about it tomorrow. Next week's going to be the first week of sort of our new schedule here at How to Trade. We're going to be streaming less. And the reason why is we're, sort of me personally, I'm going to be moving into other areas of trading inside of the company and also with trading. And a lot of it's going to be algo based. It's going to be, really putting out content that's designed to help you guys incorporate automated trading strategies, algorithmic trading strategies via in using VPS and co-located servers. Now, this is an area that I've been passionate about for a long time. I've been on and off. What I show you guys on the live streams are ways that we can manually trade, and they're designed to get you started. But once you build your strategy and you get into the markets, you're going to want stuff that's probably a little bit more sophisticated. So I will be streaming in the room either twice or 3 times a week. The times I haven't decided on yet. More than likely, they're going to be earlier in the day. They're going to be centered around that Wall Street Open, so we can get in some strategies and some trades. However, I will still be available in the How to Trade trading room, at least for the time being. Our trade ideas may get pared back as well. I've been going pretty hard on those. You're getting probably 4 or 5 trade ideas a week. We've had a lot of success this year, but always be sure that if you're curious about a market or anything, you come by How to Trade and you ask me, or you can check it out on X. Check me out on X at ShaneV_trader or our howtotrade.com on X. Typically, I'm posting trade ideas and analysis as things unfold there. But this is going to be sort of a time of transition here at How to Trade. So I've been streaming for the longest time. I streamed twice a day. And then we went to the once-a-day schedule, and now it looks like we're going to sort of pare it back to either twice or 3 times a week, depending on the week. So definitely be sure to check in. And the other thing is there probably will be scheduled for you on YouTube, on our YouTube channel. I'm going to schedule them ahead of time. And then what you're going to need to do is to stay, interact with me personally with the private messages. Feel free to dial into How to Trade. All right, let me see. T. Marina, you're not leaving like Connor, are you? No, I'm not. I'm not leaving like Connor. I will still be working for How to Trade, and I will be here streaming. There's a few other things that I need to transition into right now, though, that could wind up being let's put it this way. I'm not going to be hard to find, but definitely want to check it out. How? Let me see, Mosab, how can we know that you're going to do a live stream? The best thing you could do is probably subscribe to the How to Trade Com YouTube channel. And we're going to be putting out content there once every 2 weeks as well. And you'll get alerted when you get any new videos or really any new content there. And the streaming schedule, I'll have those streams scheduled ahead of time on the How to Trade YouTube channel. And we'll just go ahead and go from there. So you'll know when I'm going to be on, and it's either going to be twice or 3 times a week. We're not sure just yet. I'm not sure just yet. I have to see exactly what these other projects really entail. All right, everybody, that's a wrap. I'm going to go ahead and sign off. You guys have a fantastic session. Let me see, Mark Corp, can we access the new stuff you're doing? Yeah, Mark, it's just going to take a little bit of time for us to get it up and rolling. It's going to be, when the time comes, I'll share with you the YouTube channel. You'll have everything. A lot of it's going to be based on algorithmic trading, VPS, latency, things of that nature that you may want to expand into to sort of advance your trading career, things like that. But yeah, I won't be hard to find. And as always, if you guys have a question, just ask me. Send me a PM inside the How to Trade trading room. All right, everybody, I'm going to go ahead and sign off. We're back tomorrow with the Friday strategy session. We're going to be talking all sorts of different stuff. And I'll tell you what, right now, it is a bloodbath on Wall Street. We're down another 660. And I got to tell you, boy, we called this one. We called this one. All right, everybody. You have a fantastic session. Don't be afraid to take a little bit of money home with you either. Trade the action well, and we'll talk soon. See you.